Hello there YouTube, welcome to my channel. This is the Frugal Investor. In this video, I am going to give you guys a glimpse of how I analyze a business before I make it a part of my portfolio. This is the exact way that I use to research businesses before I add them to this portfolio, the portfolio that's called Growth, Value, Dividend portfolio. Before buying a business, there are a lot of metrics that I like to look at. Me personally, I really do not have time to look at a business every day, to go through its earnings, to go through the news every day. I cannot do that. I am buying businesses for the long term, and I do my research accordingly. With that said, let's get right into it. There are three things that I look at when I'm buying a business. The first thing is the type of business that I'm buying. How well diversified is the business? Who are its users? How many users it has? What type of business is it? Is it an essential or a non-essential business? The second thing that I look at is the financials and the metrics. How does the balance sheet look like? How does the income statement look like? The third thing that I look at is the CEO and the management team. How is the CEO? What kind of person is he? What kind of start did he have in his career? Where did he start? How did he start his career? Has he got his head straight, or is he cuckoo? So those are the things that I look at before I buy any business for this portfolio. No matter if I'm buying a dividend stock, a growth stock, or a value stock, which is the three type of stocks that I have in this portfolio. I like to do my thorough research through the steps that I'm going to show you right now. What type of business is it? The first step, second step, the financials and the metrics, the third step, the CEO. For this video today, I am going to analyze a growth stock and a dividend stock. Growth stock, that is Facebook. So if we look at Facebook as a business, Facebook has four platforms. It's Instagram, Facebook, WhatsApp, and they recently purchased a virtual reality firm called Oculus. So it is a very well diversified business across different platforms. According to this report from Statista in 2021, the company stated that they have 3.14 billion people, at least on one of the company's core products, that is Facebook, WhatsApp, Instagram, or Messenger. That is a staggering amount of people. So that shows me that the business is solid. Also, Facebook, we use it for everyday life. Facebook, Instagram, almost everybody has a Facebook or Instagram account or WhatsApp. So we use it a lot in everyday life. So it is, in my opinion, it is an essential business. So that is the first thing that we are looking at. Facebook, it is an essential business. This business, it is going to be here 10 years from now, 15 years from now, as far as I can say, in my opinion. And that is why I hold this in my portfolio. Now, the second thing that we are going to look at is the numbers, the financial metrics. How is the company doing in that department? So for this one, I'm going to go to Facebook Investor Relations page. The specific thing that I'm looking at is the 10K. 10K is filed annually once, and that is the thing that contains all their information for that year. Most recent 10K, which is filed on January 28, 2021. So if you pull that up, in the 10K, generally, I like to go through everything. I read everything in the 10K. I do not leave anything to chance. It takes me 3 to 4 days to analyze a company, and I read every little thing before I buy the business. But for the sake of this video, I cannot read everything, so I'm going to go through some of the main points that you can read at least before you buy a business, and they will also serve the purpose. If you know what kind of business this is, what risks they have, what they do, and all that kind of good stuff. This information, I prefer using the website called Seeking Alpha. Seeking Alpha is a website where I go and research all these numbers. But 10K is very essential. If you are investing in a business, you're starting to invest, read 10K, every page, every step of it. Now on Seeking Alpha, if we look at their top line, we can see that their top line has constantly increased over the past 10 years. It has constantly gone up and up and up. starting from 3 billion to 85 billion. Income is the bottom line. So as we can see, their bottom line, the profit that their company is making has been constantly growing over the past 8 to 9 years. So if you look at how much cash they have on hand, they have $17 billion in 2020 cash on hand. In 2019, they had 19 billion. So that is a huge amount of cash. Now, that is the third thing we look at. So the first thing is the top line, the bottom line, the cash on hand. The fourth thing is how much debt does the company have. Look at it right here. This means they have negative debt. They do not have any debt. They have negative debt of $50 billion. That is, the company is in a really strong position. The company has over 58,000 employees. That's a lot of people working for Facebook. So four metrics: top line, the bottom line, the cash on hand, and how much debt does the company have. These are the four important metrics that you must look to see how is the company doing financially. First, you see the business, what type of business it is. Second, you see these four metrics: top line, the bottom line, cash on hand, and net debt. P by E ratio for Facebook as of today is 30.35. It is a little bit high. I bought it at a P by E ratio of 26, and forward P by E ratio for Facebook is 27, which is also a little bit high, but it is still available at a really good price. Moving on, now we're going to look at the leadership. Who is the CEO of Facebook and how is he like? What type of person he is? Is he in trouble? What's going on with him? So Mark Zuckerberg is the CEO of Facebook. As we all know, he started from scratch. Built this company up. So that is a great point. He started from scratch. He's been with this company through thick and thin from the beginning, from zero. So there is nobody better that I would like to be the CEO of Facebook than this person himself, Mark Zuckerberg. That is a very solid point for me. Now, he has been in a lot of trouble recently. He has been in a lot of trouble with the government. But I think overall in the long term, Facebook will continue to do great, will continue to do better. And that is why I hold Facebook in my portfolio. Currently, I hold 38 stocks of Facebook and I will be buying more. If it goes down more, I will buy more. It is one of my favorite businesses. The next stock that we're going to look over here is a bank. It is a bank that is the heartbeat of America. If this bank fails, the economy is coming down. Everything is coming down. This is the largest bank in the United States and the 8th largest bank in the world, JP Morgan and Chase. Currently, it pays a dividend of $3.60 for every stock you own. Each stock is $152. The first thing that I look at is what type of business it is. So JP Morgan and Chase is really a well-managed, solid bank with a strong balance sheet. The largest bank in the world. It's basically like investing in the US government. You are basically investing in a savings account. So it is one of the safest investments and one of my favorite stocks to buy in the market as of today. The top line for JP Morgan has Chase has not been a steady constant increase, but it has been an increase. Every year, year over year, there has been a slight increase. There has been up and downs, but there has been a slight increase. If we look at their bottom line, the bank is profitable and it is doing much better than what it was doing in 2017. In 2020, their income did go down by almost 6 billion, but it is still more than what they were doing in 2017. The bank is profitable and it is doing really great. I mean, 29 billion in net income. The bottom line is 29 billion. Last year it was 36 billion. Due to the pandemic, they took a hit and the bottom line did go down just a little bit, but it's still way more than what they were doing in 2017. So we look at the top line, we look at the bottom line. The third thing that I'm going to look at is how much cash they have on hand. They have close to $50 billion cash on hand. If we look at the net debt for the company, they have negative $66 billion in debt. That is a strong balance sheet for this bank. It is a very well managed and very efficiently run bank. Net payout ratio for their dividend is 32.87%. That is what percent of profit they are paying out. That is 32.87%. So there is a lot of room to grow for the dividend to increase. 5-year CAGR is compound annual growth rate is 15.39%. So that is also a beautiful number. So overall, it is a very well managed bank. It's just like putting your money in the savings account. Let's look at their P by E and forward P by E ratio. For JP Morgan and Chase, the P by E ratio is 17.18. I bought this personally at a P by E ratio of 15, which is super cheap in my opinion. The forward P by E ratio is 13.94. That is beautiful. Those are beautiful numbers. That means the stock is available at a really great price, even today. If we look at the CEO of JP Morgan and Chase, now Jamie Dimon. Jamie Dimon is one of the best CEOs to run this bank. He is very straightforward, very well spoken, very well respected along the financial sector. Over in every bank, they respect him so well. I've heard a lot of great things from Chase employees, the people who work in the bank, in retail banking. They respect him a lot. I mean, this is a great guy to run this bank. You can go through his profile, read about him, watch his videos on YouTube. He's a straightforward, fabulous, simple man. And that's who I want to be running this bank, none other than Jamie Dimon. And this is one of my long-term holds. I love this company. It's one of my biggest holdings. And I will be adding more money to this stock. Currently, I own about 66 stocks of JP Morgan and Chase. And I will be adding more money, more and more money, more and more money to this bank. This is one of my safest and best holdings, in my personal opinion. So those were the two companies that we looked at. One was a growth company, which is Facebook, available at a great price. Second is JP Morgan and Chase, which is also available at a great price, a good P by E and a forward P by E ratio. Those are the metrics and the things that I look at when I'm analyzing a business. I suggest if you are starting out, read the whole 10K before you buy anything. Everything in the 10K is super important. It gives you a glimpse of what you are buying, what the business actually does, what the risks are, and a whole lot of other information that you would not want to miss if you are buying a business. So those are my 2 cents on how to analyze businesses. If you like this type of content, leave me a like, comment down below, subscribe to the channel. With that said, thank you for watching. This is the Frugal Investor signing out. See you in the next one.